Hello, good morning, and welcome to today's investor call. We are very happy to have you here. Thank you so much for joining us this morning, and we appreciate your time and interest in our fund. We have some exciting updates and insights to share with you today. So let's dive in and make the most of our time today. Thank you so much once again, and we are very happy to have you join us. My name is Abna Bando. I'll be the host for our call today. And together with me, we have Mr. Courage Mate, who is the head of Insight at IC. Welcome, sir. And we also have Mr. Obed Odente, together with Mr. Herbert Denchi. They are the portfolio managers for the IC Liquidity Fund. Okay. So the purpose of the call today is to provide you with insights and updates on the IC Liquidity Fund, and also to provide you with an opportunity to interact with our investment experts and the portfolio managers as well. Okay, to begin the conversation, we'll first discuss the current market and economic trends in Ghana. Then we'll move to the performance of the fund for the first half of the year, and also what the key investment strategies are. Right after that, we'll move to the Q&A section, where we'll provide you with an opportunity to ask questions. So you would raise your hand or mute yourself and ask questions that you have for us concerning the liquidity fund. Then would close by providing you with the initiatives and the future plans that we have for you. So it's going to be an exciting conversation today, and I hope that it will be educative and informative for us all. Okay. Before we start the conversation, we have a few housekeeping tips. Please submit all your questions on the Q&A section. So on your screen, there's a section with Q&A. Please submit all your questions that you may have on the Q&A section. We have our able customer service team who are on standby to answer all your questions and also take your details if you need any further assistance. All right. So let's start our conversation this morning. Without much ado, I would like to introduce our first speaker. He is an economist who leads the insights team at IC Group with coverage across macroeconomic stocks in the Ghana fixed income market. He has almost 13 years of industry experience across credit risk, capital market, and economic analysis. He currently holds an MPhil in economics with specialization in monetary economics and public finance from the University of Ghana. Ladies and gentlemen, I'd like to introduce Mr. Courage Mate, who is the head of insights at IC Group, and he will take us through the current economic and market trends. Over to you, sir. You're welcome.
Good morning, Abna. Thanks for having me, and good morning to our viewers or listeners on the call today. And as always, it's a pleasure to come your way with some macro updates and perspectives. Without further spend of time, permit me to share my slides whilst we get into the discussion proper. Abna, can you confirm that the slide is visible?
Yes, it is.
Great, thanks. So I guess there's no better place to start the discussion than the exchange rate, which arguably has been the most topical macroeconomic discussion so far this year. And for the reasons that the exchange rate has depreciated much faster than most has anticipated or had anticipated for this year, largely because we are already under an IMF program, and you would think that the IMF program should be able to calm a lot of nerves, control a lot of the imbalances or shocks that create this fast depreciation. But it appears so far that has not materialized as far as the exchange rate is concerned this year. And because we have seen almost 19% depreciation against the US dollar year to date. And there are a number of reasons why this is the case. And so I could just quickly run us through the few reasons why we are seeing this level of depreciation. First and most of them being that the supply of FX on the market is quite tight or quite low. And it is low because every country needs a certain level of foreign currency reserves that it holds at its central bank. Now, over the years, we've also had an erosion in the volume or in the size of this foreign currency we had at our central bank, partly and largely because we have also been shut out of the international capital market or the Eurobond market. So typically, we would have done Eurobond issuances about $3 billion and put that in the reserves and use that to assure the market. And once there's a need for it, the central bank would intermittently pump in a number or a sizable amount into the market. But today, as we speak, our reserves is just barely holding 3 months of import cover. And that appears not sufficient enough for the central bank to keep dipping its hand very deep into it to support the market. And if you have so much demand for dollars or forex on the market, then that excess demand, part of it is being supported by the central bank, but the rest is being allowed to reflect in the depreciation of the cedi. So the limited supply of dollars is translating into excess demand for forex, and that excess demand is what is leading to the depreciation of the local currency. Now, what is even driving the excess demand? There are a number of reasons. Part of them being that the fundamental is that the supply of local currency on the market is quite high, and it's coming from a number of sources. We have very low confidence or options on the market for where people can hold their money, emanating from the debt exchange that was done last year. And so the only available space or the only viable available space right now, especially for short-term investors, is the T-bills. But beyond that, there are no other options or limited options on the market. And so if you have so much supply of local currency on the market, then there's other options and there's limited options, and investors are finding the exchange rate or the foreign currency as a viable option. In addition to that, there's uncertainty around the upcoming elections and the policies that could come out and how government itself will run the fiscal or its finances. Typically during elections, you tend to see strong expenditure from the government, and that creates other macroeconomic issues. And so what you see is that investors are trying to take cover ahead of that time. So a lot of the demand for foreign currency on the market are for safe havens to protect your capital from any potential election-induced fiscal or government excess spending that can create macroeconomic imbalance. Then beyond the safe havens, you also have situations where the economy is recovering. Last year, growth reduced to its lowest level of 2.9%. But what we are seeing so far is that economic activity is gradually picking up, and that is being reflected in strong growth in imports, especially non-oil imports. And that import demand requires FX to fund it or to finance it. And the FX being already low means that there is that excess demand on the market, and that is translating into the exchange rate depreciations. And then maybe I could just wrap up by saying on this particular one by saying that when you look at the alternative investment outside of the Ghanaian economy, something like the US Treasury security, the returns on them are looking quite attractive for some investors. And so some investors will also want to look at that option of, can I purchase dollars to buy the US Treasury securities, where a 3-month paper gives a certain level of dollar-denominated returns? So that competitive investment option is also driving the demand we have on the currency markets. But to the outlook, I mentioned earlier that the supply is quite low. So what do we think the supply outlook will look like? Well, a week ago when the Ministry of Finance met the press, and as well as this week when the central bank presented the MPC updates, they assured the market that the number of supply that sources that will come into the market, and some of them were listed. For instance, the authorities are very close to securing a deal with bilateral creditors, and that deal will allow the IMF to approve and disburse $360 million by June. Then the authorities also, the Ghanaian authorities are also expecting that by, Parliament has approved $150 million. And so the World Bank will be able to disburse that money for some fiscal operations, but the dollar value will go into the reserves. Then also the government expects that by the third quarter of this year, the World Bank would approve $300 million as part of a development policy operation facility for the government. Now that $300 million will help the central bank also boost its reserves. Now, beyond all of this, there's also the expectation that cocoa board will come onto the market, and what other options that we have on the market, like the central bank continue to buy gold reserves, gold for reserves and the like. So these are the sources that the authorities are counting on. But we also think that whilst this signals very strong inflows expected to come, we continue to see the market remaining cautious on the outlook, largely because the supply of CD is quite huge on the market. And so that imbalance remains a concern for investors. Now, at this point, it is only proper to then move into implications for inflation and implications for interest rates. Now, when exchange rate moves the way it is moving, when we see so much depreciation, and as a largely import-dependent economy, the import prices or the cost of imports tend to go up, and importers and traders pass this cost to consumers. And what you see is that it tends to create higher price levels on the market. Now, you recall that in the second half of last year, we saw a sharp reduction in inflation. Inflation is basically the rate at which prices of goods and services are going up. So when inflation is coming down, it means that prices of goods and services are going up, but at a slower rate. And we saw that decline in inflation, especially in the second half of last year. Now, when we entered this year with the hope of an IMF program and continued tightening of fiscal and monetary operations, we had expected that inflation will continue to decline. But the 4-month performance of inflation told a different story. As we displayed on the slide, you will see it's more of a zigzag movement in inflation. Commenced the year going up, came down in the following months, went up in March, came down in April. So it's also partly reflecting the exchange rate pressures we've seen on the market, because it feeds through to the prices that importers will charge for their value for their goods. Then it also feeds into prices of petrol, which also feeds into transport, which has implications for general price of goods and services and captured in inflation rates. So over the course of the first 4 months of this year, inflation has been going up and down, largely because of these exchange rate pressures. And so what do we see in the months ahead? Generally, we expect that inflation will also continue to pass, exchange rate pressures will pass through to inflation, higher transport fares will pass through to inflation, and higher petrol prices will pass through to inflation. However, the impact we expect will be moderated or limited by the benefit of what we call a favorable base effect. Now, basically, what this means is that, when you calculate inflation, you are looking at the consumer price index for at a certain point against the consumer price index at this current point. Now, when you look at the consumer price index as of last year, and you measure and you use that as against as a denominator, that is the base, against this year's consumer price index to calculate the percentage change. The bigger base last year, the index went up significantly because of taxes. Exchange rate was also part of the reason. Now, the bigger base we expect to mean that the percentage change in the consumer price index this year will likely see that impact in the second quarter more pronounced. And so the more pronounced impact of that favorable base effect means that you will likely see inflation coming down when we see the May inflation rate and possibly the June inflation rate. All of this means that, well, when you measure the rate of increase in prices this year, it means it will not be as fast as you saw in the same month of last year. So essentially, that is what we are expecting, that though exchange rates and other factors pose upside risk to inflation, we expect the general decline in inflation to continue over the course of this year, but not in a continuous manner. You will likely see some bumps up down movement along the line, but generally the trend should revert downwards from the zigzag performance we saw in the first 4 months of this year. Now, what has all of this meant for your the returns on your investment, particularly interest rates specifically? Now, what we've seen is that if you look at the fact that inflation came down sharply in the second half of last year, if you look at the fact that there is so much CD supply on the market, now the CD supply on the market has boosted demand for government of Ghana treasury bills. And when there's demand for government of Ghana treasury bills like that, the government of Ghana, who is the one selling the treasury bills, will now say that, okay, now I would lower the interest I'll pay you because you all want it, and I can't pay you so much interest. So since you all want it, I'll pay you lower interest rate. So the government of Ghana is capitalizing on the strong demand for the treasury bills to say, okay, then I'll pay you lower interest rate. So that strong demand for T-bills is leading to a reduction in interest rates on treasury bills. But then also the fact that inflation has dropped sharply since the second half of last year meant that the risk to investment, to the real value of the investment, is going down. And the government of Ghana is also capitalizing on that to say, if the risk is going down or has gone down over the period, let me also reduce how much I pay you to compensate you for the risk. And so over the course of the first 5 months of this year, we've seen declines across the 91-day to the 364-day T-bills by the cumulative decrease is measured by the green text between each of these tenors or maturities. Basically, what we notice is that because inflation has not declined in the same manner as we saw in the second half of last year, you notice that if you take out inflation from the nominal interest rates, I mean, for instance, the 91-day has a nominal interest rate of about 25%. However, 25.1%, but inflation currently is around 25%. So if you take that out of the nominal interest rate on the 91-day, you are looking at just about 1% or less than 1% inflation adjusted, or what we call the real return on your investment. Now, if you compare that to at the end of last year, you will see that the real return or inflation adjusted return was 6%. But because inflation has not dropped continuously in line with the decline in interest rates, the real return has reduced. You also notice that if you move into the 182-day, the real return is higher. It has moved higher to 3% at current inflation levels. So essentially what it tells us is that nominal interest rate is coming down. Inflation is also coming down. But inflation has not come down as fast as it did in the same period of last year. So the inflation adjusted returns is a bit slower this time around. However, there is indication that inflation will continue to go down. And so we expect that the nominal interest rate will also go down. But then the choice will now be choosing the appropriate tenor that will maximize or give you the maximum inflation adjusted return or yield. And that's essentially what we see as far as interest rate is concerned. Just to summarize, inflation has been elevated or has been uncertain so far this year, but we expect that the outlook is to the downside. And once the outlook is to the downside, nominal interest rate would also come down. However, we expect that when you take inflation out of the nominal interest rates, the real interest rate on your investment should remain in positive territories, ranging between what we have here, our 1 percentage point to just in the 3 to 4% area. At this point, I'm now pause here and hand over to you and open to questions. Thank you.
Thank you very much, Courage, for such an elaborate and informative conversation. I would encourage all of us to put down our questions on the Q&A section, or you can write it down. Once it's time for the Q&A section where you can unmute, you can ask all your questions that you have for Mr. Courage. The biggest takeaway I took from what you said was that the reason for the decline in treasury bill interest rates is due to strong investor demand. And in the coming months, we're going to see the economy improving gradually. I would also like to ask a few questions. If you can point out how some of the global trends we are seeing is also going to impact our investment. If you can point a little or talk about the global trend. I notice you discuss a lot more of the local, but if you can give us a few tips on the global trends as well.
Right, thanks. And you recall at the start of my presentation, I mentioned the fact that there are also competitive investment instruments out there, such as the US Treasury securities. And these US Treasury securities also pay interest rates on them. So for instance, if you pick the 91-day US Treasury securities, for instance, as of now, it's paying in excess of 5% on the 91-day or 3-month US Treasury paper. Now, those who have access to be able to invest externally will look at that and would want to rather hold that paper when rather you would have been earning 0.7% in the city-denominated treasury security. So that would then fuel demand for FX to be able to purchase those kinds of underlying securities or US or external investment options. So the question then is, what will impact investor demand for Ghana securities in the outlook? Currently, the expectation is that US and other advanced markets will start to cut or reduce their interest rates subject to the performance of their inflation, because high inflation means that interest rates in other advanced markets remains elevated. Now, at the start of this year, the expectation was that the US Federal Reserve or the US Central Bank will reduce their interest rates. And that actually helped currencies like ours to start the year on a better footing, until it turned out that interest rates will not go down as fast as we had anticipated. And so the US dollar regained its strength and hurt our local currency. So in the end, the interest rate outlook in the advanced market is also very important. And the interest rate outlook is determined by how inflation in this market, in this advanced market, behaves. Currently, the expectation is that if there's going to be the start of reducing of interest rates, it's likely to begin in Europe than before the US, because inflation in Europe is closer to their medium-term target of 2%. As we speak, inflation in the Eurozone is 2.4%. Inflation in the UK is 2.1%. These areas or these economies have their long-run target of 2%. So they are close to it. So the expectation that they should start cutting their rates, if not from next month, probably then the month after. But the US, who has an inflation target of 2%, currently has inflation at around 3.4%. And so the central bank is really not confident that they are near there in the immediate term. So US interest rates likely to stay higher for longer. And these are the things that can negatively impact currency, negatively impact returns on investment in other markets like ours. I hope that helps.
Yes, it does. Thank you very much, Courage. Thank you so much for the insight and the information you provided us this morning. Would like to move on to discuss the performance of the fund. And to do that, we have a seasoned, renowned investment expert who is part of the the investing team. He is in the person of Mr. Herbert Denchi. He would take us through how the liquidity fund has been performing and what the key investment strategies are moving forward. So you're welcome, Herbert, and over to you. Thank you.
All right, thank you, Abna. And good morning to everyone. Please give me a moment to quickly share my screen. Abna, if you could kindly confirm that my screen is visible.
Yes, it is.
Okay, thank you. So good morning once again to everyone, and welcome on this call. Thank you so much, Courage, for the market color. So we've discussed inflation, we've discussed currency, and we've also discussed the outlook for the economy. Now we are delving into the performance of the fund. So in terms of returns, as of 30th April, the fund returned 21.8%. Now, the chart we have on the right is comparing where the fund was at the start of the year and then where we are now. So the lighter, smaller circles in blue is what's representing the performance as of the start of the year. And then the bigger circles with the deeper blue colors, what's representing the end of 30th April's performance. So between 1st January and then 30th April, the fund's performance increased by 0.2%, so from 21.6 to 21.8. And in terms of AUM, we had a very significant increase of about 147%. So we started the year with an AUM of 33.8 million, and we had about 83.5 million as of 30th April, which is pretty significant. And it's all thanks to the trust that you've placed in us as a fund manager. Moving on to the next slide, we are looking into the portfolio now. So we have about 30% of the portfolio currently in GOGs. I think I saw a question from one of the participants on what's the benefits of investing in IC Liquidity Fund as compared to Treasury bills. So the subsequent slides would probably throw more color on that. But this is the current allocation of the portfolio. So the orange rectangle is what we have in GOGs, which represents 30% of the portfolio. The current average yield of the GOG exposure is about 26.1%, and the remaining allocational exposure is in FDs and then repos. And so FDs and repos are simply bank securities. So we have exposures with GT, Access, EcoBank, Stanbic, Republic, and then ABSA. Now, these are banks that we have conducted credit quality assessments on them, and we are comfortable placing funds with at the moment. Now, I just wanted to highlight the fact that we currently have a very heightened credit risk environment. And so we are very cautious and particular about the banks that we place funds with. And so these are the banks that we're currently comfortable with. And again, we are maintaining a balancing act in making sure that the fund still delivers competitive returns in the portfolio. And hence, we still have some GOG exposure, which offers higher yields and ensures that the returns on the fund are competitive. Now, this slide is more or less diving deep into what we actually did, what moved around in the portfolio. So we increased our T-bill exposure by 22.3%. If you've been paying attention to the investor notes we sent out, we did have a view that Treasury bill rates were not sustainable at the start of the year when they were soaring around the 30% levels. Now, we've seen those rates significantly decline, and Courage give more light on that. So that has given us much comfort to start increasing our T-bill exposure. So we did increase our T-bill exposure by 22.3%. And again, on the back of this, we also saw some positive developments on the IMF program that we're currently under, and also the external debt restructuring conversations as well. External bondholders were presented with an offer to restructure their Eurobond. So we're seeing some positive developments on that front. And again, the declining interest rate environment makes us a bit more comfortable increasing our exposure. But again, we are doing this gradually because we are mindful of the risk to the outlook. So Courage has again mentioned that we see some risk with regards to currency. Inflation still is a bit unstable in terms of the trend, which we probably saw at the start of the year, where inflation was expected to trend downwards consistently. So these risks are key in the investment decisions that we take for the fund. So let me just quickly touch on the chart on the right. So we have the repos that at the start of the year, allocation was significantly high. So about 82.2% of the portfolio was in repos. We've gradually watered down that exposure to 47%. And you can see on the Treasury bills, which is the last chart on the right, we've increased our exposure from 11.4 to 33.7%. So this is us adjusting the portfolio to the developments that we are seeing in the economy, and hopefully we'll continue to do that and ensure that at every point in time, the returns in the fund are competitive. The last bit is on our outlook and strategy. So I've mentioned the fact that interest rates are trending downwards. And again, that gives us some comfort that refinancing risk are pretty mild now for the government. Now, in increasing our treasury bill exposure, again, we are doing this gradually. So we don't want to go aggressive in terms of this action. So we are doing this gradually and making sure that at every point in time, the fund is balanced in terms of the portfolio allocation. In terms of the outlook, again, we saw a CRR directive from the Bank of Ghana, and this was to address this high GHS liquidity that Courage mentioned. So we've seen significant GHS liquidity on the market, and the Bank of Ghana's new CRR directive was meant to mop up that excess liquidity. Now, what we expected to happen after this directive was for banks to scramble for liquidity, because what the CR directive meant was banks now have to place extra funds with the Bank of Ghana as reserves. But the idea of scrambling for liquidity by banks, it played out for a short while. And so we realized that banks have now started putting lower rates on their fixed deposits and then their repos as well. And the reason being that they've been able to adjust their liquidity books to the new CR directive. Now, going forward, what we intend to do is to leverage our long-standing relationships with some of these banks in order to ensure that we are still securing higher rates for our fixed deposits and then repos. So we are still in the process of doing that. Currently, the repo part of the portfolio has an average repo return of about 23.8%. So we're still making strides to ensure that the yields on the FDs and repos are still competitive. And then lastly, speaking of possible headwinds and then risk, the December elections is about 6 to 8 months away. And also we have a fragile currency outlook as well. I'm sure most of you have seen the retail USD GHS rates and are probably worried about the outlook for currency. So these are some of the risks that we see impacting the portfolio. But again, we are very agile in the execution of our strategy. And like I highlighted in the previous slide, at the start of the year, we had a significant exposure to repos. We watered down that exposure on account of declining interest rates. And so in terms of the risks to the outlook, again, we are remaining agile on that front and ensuring that at every point in time, we can tweak the portfolio to match what's happening on the broader macro environment. This is the last slide, and it means a lot to us. As of 30th April, we had about 6,659 unit holders in the fund. I think we have about 200 on the call at the moment. And we just wanted to say a big thank you for entrusting your funds with IC Liquidity. If you wanted to start a church, we could start a big church with 6,659 members. So on behalf of the management team and the investing team, we wanted to say a big thank you to everyone on the call and for every single person that has entrusted, whether it's 1 CD, 5 CDs, 10 CDs, it still means a lot to us. So this will bring me to the end of my presentation and I will take questions. Thank you.
All right. Thank you very much, Herbert. I would like to ask a few questions we've gotten from the participants. So one wants to know what the full meaning of AUM is, and then also how the fund has adapted to recent currency volatility since April. So if you can elaborate that for us, thank you.
Okay, so apologies for not talking about AUM. So AUM is assets under management, the funds we currently manage in the portfolio. So that's AUM. How the fund adapted to currency volatility? I think we mentioned the fact that we've tried to water down our repo exposure, because when you compare the rates on repos to treasury bills, the treasury bills offer higher yields. And so on a real return basis, obviously currency depreciation eats into the real returns of the portfolio. And so we've tried to increase our T-bill exposure to take advantage of the higher yields and improve the real returns on the portfolio. We've had discussions in the past on similar calls like this, where we've considered dollar assets, i.e. USTs in the portfolio. But we are still in the process of ensuring that that's very optimal and ideal for the fund, and is also very compliant with the MPRA's guidelines. So we're having those discussions and making sure that whenever we make that decision, it would be optimal and ideal for the fund. So those would be the two updates that we've made with regards to the currency volatility.
All right, thank you very much, Herbert. We'll move to the Q&A section where we'll allow participants to raise their hands and then unmute and ask your questions. Please keep your questions very precise so that we can answer as many questions as you may have. So the first hand I see is Mr. Ken Milton. So, sir, if you can unmute and then ask your question.
Hello, please. Good afternoon. Oh,
Good
sorry.
afternoon.
Good morning.
Sorry, good morning. Yes, good morning.
Yeah. Okay. So I would like to say thank you very much for making a platform like this where we could also invest our money and then receive safe return. Okay. My main question is, I've been trying to research if we have any legality with the Bank of Ghana, if there's any paper or like article that I don't know, gives us confidence that maybe the Bank of Ghana, that our funds are safe with IC. So if there's, I've not seen it, but if there's one, I would like to, if it can, the URL can be shared with me, I'll really appreciate it. Thank you.
All right, thank you very much for your question. We would reach out to you to provide you with more insights on how safe your funds are. All right. Okay, I would like to also invite Ms. Dora Yuri to help us with the question as well.
Hi, can you hear me? Good morning, everybody.
Yes, we can hear you.
Thank you. So thank you for the question. I think the appropriate answer to that is that we are licensed by the Securities and Exchange Commission in Ghana. Their website shows all licensed fund managers, of which we are one. It also shows all licensed investment banks, of which we are one, all licensed brokers, of which we are one. The Bank of Ghana also has a list of licensed FX traders, of which we are one. And the NPRA also has a list of licensed fund managers, of which we are one. And they all show that we are in good standing. So we'll be happy if you can independently verify with all our regulators. And after that, we can assist you with any further questions you have. Thank you.
All right, thank you, Dora, for the answer. Would like to move on to Tim. The next hand I see is Tim. So if Tim, you can unmute and ask your question. Tim, are you on the call? Are you ready? Okay, if Tim is not available, we'll move on to Heike. Heike, you can unmute and then ask your question.
Okay, thank you very much. Hello.
Hi,
Hello.
we can hear you.
Thank you very much. I was actually okay, Marco, let me move straight to the question. Some time ago I opened the site and then I saw this banks, and then you have the buy sell along it. But then when you tap on any of those things, it doesn't work. And then I was actually making a deposit for something else, but then it went directly into IC liquidity, and then it's like whenever you make a deposit, that's where it goes through. I don't know if the site is now being developed or the assets are yet being listed or something, but I don't know. Is there a problem or something? Because I've tried several times to maybe invest in a particular asset, but it's not working.
All right, thank you very much for your question. So once you register on our platform, you first have access to invest in the IC Liquidity Fund. If you're interested in investing in stocks that are the companies listed on the stock market, you first need to have a CSD account before you can invest in that. So you request for a CSD account and we create one for you before you can invest in stocks. We have our team who have taken your details, will reach out to you to assist you on how you can create a CSD account and then subsequently invest in the stocks we have on our platform. Okay, I hope that helps. So we'll move to the next person, who is Emmanuel Chum. So Emmanuel Chum, if you're ready, you can unmute and then ask your question.
Hello.
Hi,
Hello.
Emmanuel, we can hear you.
Okay. Please, if you try to buy shares through the Momo site, you would find that there are just few selected company shares there, but like it's all listed on the trade life. So I want to see if maybe you have some particular partnership with those companies listed on the Momo site apart from the trade life, or it's just something that you just give it out for just some factors sake.
All right. Yeah, so on the Momo side, you see a few listed companies where you can put in an order to buy. Those are mostly the liquid stocks that you can invest in. However, on our online platform, or if you go through our app, which we'll talk about during the presentation, you are given access to invest in all the other companies listed on the stock market. So that would be the answer to your question, Emmanuel. I hope that helps. So I will just explain what liquid means. So liquid means that the stocks can be easily bought or sold. So it's not too difficult to buy or sell those stocks. So that is what liquid means. All right. I'll move to the next person, and the next hand I see is Mumuni Salifu. So if you are ready, please unmute and ask your question.
Hello, good afternoon. Hello?
Yes, good morning. We can hear you.
Yeah, okay. Yeah, my name is Mumuni Salifu, as you said. I wanted to find out, one, if per the second presenter with a chart of where he has been investing, I saw Republic Bank with some percentage. By my information I'm gathering on the ground for the past few months are that Republic Bank is not doing all that very well. In fact, all the companies which, or the institutions which the government try to rearrange is not really doing well. That is first question. Second, I wanted to know whether IC is considering something in crypto area, since in the order of the day, you look at what is going on to the world, people are now trying to also invest in those areas, though considering the risk factors, whether in future they have plans in going into those areas. Basically, these are my two brief questions. Thank you.
All right, thank you for the question. I think this question goes to Herbert. He is referring to your slide on the percentages. So if you can take that question for me.
Yeah, sure. Thank you. Thank you for the question. So For Republic Bank and for any other bank that we place funds with, I did mention that we have credit models that we use to pick and select our banks. We use the CAMEL criteria, which covers capital adequacy, liquidity, earnings profitability, management efficiency, all of that. So there's a robust, model that we use in selecting these banks. But the feedback is well noted. Would also keep our ears to the ground. So that's the process we go through in selecting the banks that we place funds with. In terms of your second question, hopefully in the next 10, 15 years, if Bank of Ghana and SEC allows fund managers to invest in crypto, I mean, why not? But for now, we are not allowed per the MPRA guidelines to invest in risky assets like crypto. If you want to invest in crypto, I think you should do your own research and then make sure that the risk that you're willing to take, you're comfortable with. But for now, the fund is not interested in crypto and any related risky assets as well. Thank you so much.
Thank you, Herbert, for the response. We'll move to the next question. The next person I have on my screen is Mr. Bright J. Banfo. So if you are ready, please unmute and ask your question.
Can you hear me? Hello?
Yes, we can hear you, Bright.
Yes, I did ask a question earlier on what plans IC has in terms of product offerings. But then again, back to the submission you made earlier on some investors who have access to invest outside the country go and say invest in say the US market or the UK market. I'm just wondering if IC has any plans or intentions of giving us some access, say like investors in Ghana access to the outside market. Hello?
Yes, thank you very much, Bright, for your question. IC is working on different products that offer different product offers. Okay, that's where we'd explore other markets. So it's something we are working on the pipeline, and once that is complete, we would introduce and inform all our clients about it. So it's something we are working on the pipeline, please. I hope that helps. Okay, so I'll move to the next person on my screen. I see Ibrahim Nasiru. If you're ready, please unmute and ask your question. Hello, Ibrahim. Hi, Ibrahim. If you are speaking, we can't hear you. Okay, while Mr. Ibrahim works on getting connection, we'll move to His Excellency. So if His Excellency is ready, kindly unmute and ask your question.
Okay, thanks for the chance to talk. I hope you can hear me.
Yes, we can.
Okay, yes. My name is Senor. Forgive me. I thought I changed that name. Yes. So I want to ask, with the prevailing inflation rates as compared to the interest rate when it comes to T-bills, what assets can I invest in to gain maximum yield, given my purchasing power? And also, I would like to ask. That's my first question. I hope you heard that one. Hello.
Sorry, yes, I
Hello.
did. Yes, please, I did. You can move on to your next question. Hi, Mr. Hi, His Excellency. Hello. Okay, it seems we've missed you, but I would have Mr. Herbert help answer the first question you have concerning what other assets you can invest in. So Herbert, over to you.
Sure. Thank you, Abuna. I'm not even going to lie, that's a very hard question in this current market environment. I think the best answer is, and that's something that I think everyone is looking for, that's some currency protection in our portfolios. Now, there are a couple of retail products on the market that offer some of these currency protection assets. What I'd say is speak to your investment advisor before investing in any of them. But if you can't get some currency protection in your portfolios, I'd recommend that you do that. But do speak to a recognized or licensed investment advisor for help on that as well. Thank you.
All right, thank you very much, Herbert. Due to the time, we can't take all your questions, so we'll take about 3 or 4 more. I would encourage you to please submit all your questions to the Q&A section of your screen so that we can answer your questions accordingly. I will move on to Mumuni Salifu. If you are ready, you can kindly unmute and ask your question.
Yeah, hello. This is Mumuni. IC Security. This is my observation. To me, it seems, for instance, your presence is not felt much in the country. For instance, I get to know of you when I wanted to buy, I was interested in buying MTN shares, and then I went into their platform and I was directed before I got to know you. And from your platform, even when you want to know your office, I think it's only in Accra. And believe in me, there are a lot out there who want to really go into investment. There was a time I was talking with my wife. I mentioned your name because I've invested with you. And then looking at it, since I started with you in January, it's quite impressive. So as she was telling me, I see why she only know of the current those with the names in the market, like the data bank and those. But so my advice is, if you could let us felt more of you, your presence, also a lot of education for people to understand what really is an investment. So that I believe with this, you'll be able to widen your network more, so that some of us, together with our children, who are having a lot of belief and hope in you, that you do a lot of good to ask and invest more. Thank you.
Thank you very much, Mumini, and we appreciate your feedback, and we would definitely work on our presence. Thank you so much for the feedback. Due to time, we'll take about 2 or 3 more questions. Please reach out to us. You can reach out to us via WhatsApp. So our WhatsApp number is 055-255-7789. And also you can send us an email to clientservice@ic.africa. You can also reach us via phone call. Our phone number is 0308-250051. So please reach out to us if you have any further questions or assistance that you may need, and we'll be happy to assist you. So we'll take the last 2 questions and then we'll move on to our presentation. The next on my screen is Techno K17. So if you are ready, kindly unmute and ask your question. Hello, Techno K17. Are you with us here? All right, so move to the next on my screen, which is Ibrahim Nasiru. So Ibrahim, if you are ready, kindly unmute and ask your question. Okay, if Ibrahim is not ready, we'll move to Prince Charles Banasco. If you're ready, kindly unmute and ask your question. Hello, Prince. If you are speaking, we can't hear you. Okay, would have to move on to the next person. Can we have David Aqua? If you are ready, kindly unmute and ask your question.
Hello.
Hi, David. We can hear you.
Okay. My questions. I have two questions. Observing the performance from the last 2 months that I joined, I've observing a 0.02% interest. But I'm just asking if the interest is just fixed one or just been determined by other external factors. And my second question is on registering. I saw there is a dollar account, but I wasn't able to register. Is there any way to register the dollar account if it's possible? Thank you.
All right. Thank you for your question, David. So the interest rate on the fund is not fixed. It depends on the performance of the fund. And so as the fund as we run the fund and the fund performs well, the interest rate or the interest you realize on your investments would also be different. So it's not fixed. With regards to the dollar investments, we'll reach out to you to understand, ask a few questions, and then we would set you up afterwards. So we'll reach out to you for further clarification and understanding. Okay. So we'll take our last question from Mr. Benjamin Anani. If you're ready, please unmute yourself and ask your question. Hello, Benjamin. If you're speaking, we can hear you.
Can you hear me now?
Yes, we can.
Okay, thank you very much. I'm actually a content creator, and I've been researching on investment. I talk about stocks, I talk about high yield investment, and I was investigating more on MTN shares. You know, I went to Ghana Stock Exchange to find brokers who are, certified to, if someone wants to buy a share in MTN or any other company, and I found yours there. So I went through MTN and I found IC there, which led me to your website. I registered. It's been like, I think I registered on 5th May. I deposited because I wanted to test your platform to see how it is. And it's been like 3 weeks. I've not been able to invest in it. They told me they are setting it up, and up to now I've not been accepted yet. And so I'm finding it difficult to, I don't know, I'm a content creator, as I said, and I want to do more videos on that because I've seen that we don't have platforms like yours in there which someone can easily, because when I'm teaching content, this investment things, it means you have to go to the stockbrokers where if someone is in Tamale or in the north and wants to register, he has to come to Accra and do all those things, which I think is a little difficult. So if your platform is available and you can easily make it available to people, I think I would like you guys to help me to activate it so that I can teach more on your platform.
All right, thank you very much, Benjamin. So your account has been approved and we are working on setting up your CSD account for you. So our customer service team will reach out to you once the CSD account is ready, and then we'll assist you on how to invest on the stocks. We also appreciate your feedback as well. Thank you very much.
But hello, I would like to know how many days do you have any so that I'll be able to, if I'm trying to train someone on IC, I'll be able to tell them the number of days that the account will be approved.
All right, Benjamin. So typically with a CSD account, it takes about 2 weeks or more for it to be set up. So usually that's a time frame we work with, and so you can give that information out, but we'll reach out to you for
Mine
more
is more than
clarification.
mine is more than 3 weeks. So
Sure.
that's what.
Yes, we'll reach out to you, please, for further clarification and assistance. Okay, thank you very much. So we would have to move on to the next part of our presentation, unfortunately. Please, if you have any further questions, kindly submit them to the Q&A section, and then we'll assist you accordingly. The next part of our presentation is to introduce to you our webpage we have developed, and then our app as well. And to help us with the presentation, we have on the call Mr. Isaac Bua, who will take us through how to access the web page and also the application as well. So Isaac, if you are ready, over to you.
Hi, Abna, can you hear me?
Hi, I can, Isaac. I can hear you.
Okay, and can you confirm if you can see my screen as well?
I can see your screen, please.
All right, great. So good afternoon, everyone. As Abna rightly said, I'm here to take you through our new webpage. This webpage now has the features for clients to be able to access the various products we have for you. So to have access to our page, kindly type in world.ic.africa in any browser, and then you have access to our webpage. Now on the right-hand side corner, you realize that we have some buttons there. That is the mutual fund, stock, fixed income, and the login and register button. Now for those trying to trade in stock, kindly click on the stock button and then click on start trading to begin the process. For those trying to purchase fixed income assets, you also click on the fixed income button, and then you can click on start investing to have access to the various fixed income assets that's on the market. Examples are the T-bills. For existing clients who want to have access to that dashboard, you can always click on the login button to sign in with your email address and your password. For clients who are new, you can click on the register button to create an account with us. Also, and based for the purpose of this call, for clients who are looking to invest in our mutual fund, that's the IC Liquidity Fund, we have more information on the IC Liquidity Fund button. Alternatively, if you would want to use our mobile app, you can click on the Get the App button here, or scan the QR code which we have available here to be directed to the Google Play Store or the Apple Store to download the app. The new feature we have currently on our platform is the investment calculator. Now, this investment calculator is a tool we have made available to you to help you with your financial planning and also projections as well. Now, this particular tool enables you to input in an initial amount if you have an initial amount for investment, the number of years you would like to invest, if you would want to make a regular top up, and the frequency for the top up as well. Also, the interest rate that you would want to use for this calculation. I would go through a scenario where a client, Kofi, would want to have an initial investment of 1,000 cedis. Kofi would want to invest over a period of 5 years. And during that period, he would like to make a top up of 100 cedis on a monthly, every month. When you click the drop down button of the top up frequency, you're able to select how often you would want to make a deposit. So when you click, so you select that and then you input the interest rate. Now the interest rate you have to know would have to be referenced to the average interest rate on the market. Once you click the calculate button, the projections will pop up on the left-hand side of your screen. Now, over here, you get to see that Kofi would have made 13,299.34 at the end of 5 years after he has made a contribution of 7,000 Ghana cedis and would have made an interest of 6,299.34 pesos. Now, this is to help you make an informed decision when it comes to your financial planning at the same time with your projections as well. For clients who would want to speak to a financial expert or would want an investment advisor, you can click on the Talk to Experts button here. When you input your name, your phone number, and email address and submit, we would have one of our financial experts reach out to you to have a conversation and discussion to best assist you on the various assets that's on the market and one that would suit your needs. We also have available our FAQ button here. Now, these are frequently asked questions on our products and services. So you can always visit this site as well, and then read more about it. Whenever you have an issue, you can also send us a message via our WhatsApp number, as Abner gave, and an email address as well. I would like to share more light on the app that we have. So when you click on the get the app button, you would have access to the, as I said earlier on, the app on the Google Play Store or the Apple Store. Now, for existing users or existing clients, when you download the app, kindly click on the login button and then enter your email address and your password to have access to the dashboard. However, if you do not recall your password, you can always click on the reset button and then reset the reset password button to reset your password. For new clients, you can also register using the mobile app by clicking on the register button and then go through the process. Thank you.
Thank you very much, Isaac. We are excited to have an app for IC Liquidity Fund. You can search IC Wealth either on your App Store or Play Store and download the app. Would like everyone, or we encourage everyone on the call to download the app, give us your feedback, and we'll be happy to hear from you. All right. So again, you can always reach out or contact us via our WhatsApp. The number is 055-255-7789, or via email. Our email address is clientservice@ic.africa, and we'll be happy to assist you. We are getting closer to the end of the call, and would like to thank you all so much for joining us today. Our next engagement is likely to be in August, and that is going to be our second AGM, annual general meeting on the IC Liquidity Fund. Now, before we wrap up, would like to invite our speakers, Mr. Courage and Herbert, to give us their closing remarks. So we'll start with Courage.
Right, thanks, Abena. And I would like to say thank you to everyone on the call for taking the time to join us. Just to summarize that from the macro and market perspective, the first 4 to 5 months have not been very rosy, but the outlook for the rest of the year should be a bit more moderate than the uncertainty we saw in the first 5 months of the year. And I'm speaking particularly with respect to the inflation outlook. We expect that inflation will start to come down gently in the few months ahead. We also expect that as inflation is coming down gently, what it means is that the risk of losses to the value of our investment is coming down. And so in real terms, we should get something which is appreciable when you take out the risk of inflation. But that also means that as inflation is coming down, it also means that the nominal interest rate that we're getting on, say, an investment like, say, treasury bills will also be coming down. But the expectation is that inflation will come down faster. And when you take out inflation from the nominal interest rates, you have something positive as a return on your investment. In the midst of all this, I believe we can continue to trust our portfolio managers to take the best decision in our interest, not just to maximize returns, but to also minimize the risk of losses to our investments. Thank you very much.
Thank you very much, Courage. Herbert, over to you, please.
All right, thank you, Abna. And again, a big thank you to everyone for joining. These conversations are always enriching, and we appreciate the feedback as well. So going forward and into the next couple of months, we've highlighted the risks to the outlook. One of the things that we want to also mention is we don't intend to stray away from the core mandate of the fund, and the fund is a liquidity fund. So we know, yes, currency is a bit volatile now, and there are a couple of risks that would probably force us to try and catch up with the returns, i.e. the raw returns that Courage has again highlighted. But we're still staying true to the mandate of the fund and ensuring that whatever we decide to do, it's still in line with the safety and precautionary measures that we always ensure, so that returns are sustainable in the long run. So thank you once again, and hopefully we can do this in August.
Thank you so much, Herbert. We'd like to thank you all for your contribution and engagement throughout the call. Let's continue to collaborate and make meaningful progress together. IC Liquidity Fund is here for you, and we are working hard to provide the best returns and also safeguard your investment. Once again, please reach out to us, and we are always available to assist you. Thank you so much, and have a good day. Thank you once again.
On the things that are affecting her people, I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting wealthy. I see Africa. I see Africa. I see an Africa that's focused. I see Africa. I see Africa. I see an Africa that's global. I see Africa. I see Africa. I see Africa. I see